If you got a CP2000 in the mail and the IRS has asserted additional taxes and penalties on your return you filed years and months ago, then this video is for you. The IRS is basically saying somebody reported an income who paid you, but you didn't report that income. An income from a Cash App, Venmo, PayPal, Zelle, or a side gig, a part-time job, or an income from a partnership, or a bank interest payment. Something you did not include in your income when you filed your tax return, and they have found it now. And the IRS is now saying that you didn't tell us about all your income. Is that true? If so, you shortchanged us, and now you gotta pay with interest and penalties. So your stomach drops and your day is ruined. You thought you were done with your taxes, but here we go again. And here's the thing, your accountant is not on the hook for any of this, just you are. So what do? First, don't panic. A CP2000 is not a bill, it's a proposal. Second, don't ignore it. That's the worst thing you can do. Third, respond within 30 days. Agree if you are right, explain if you are wrong. I discussed this topic in full detail. I'm going to talk about something that kills most business owners in the first few years of their business. And this one has nothing to do with how you operate your business. It's completely different and how it destroys your business. I've gotten very close to it, so I know I'm going to be talking from personal experience, so stick around. I'm talking about CP2000 notices. These are notices that the IRS issues to taxpayers when they see some discrepancy. Let's talk about that. So every year, the good old mighty IRS issues about 4 million CP2000 notices. That's 4 million letters going out to taxpayers saying, hey, we noticed something that does not match. And here's the kicker. It costs taxpayers $4 billion in additional taxes, penalties, and interest combined. $4 billion. That's not money owed because you try to cheat the system or you try to evade taxes. That happened just because you make small mistakes. And the IRS says, I am sorry, you still owe the money, you gotta pay it. This problem is huge. That's money lost because people made simple mistakes. Mistakes that could have been avoided very easily. We can talk about that today, so stick around. Now, before you think these people are trying to cheat the system, stop right there. Most of these are regular business owners and employees who forgot to report something. Not fraud, not tax evasion, just forgetting. And these are hardworking people, just like you and me. People running small businesses, managing rental properties, working side gigs. People who are trying to get things right, but got caught up in the complexity of it all. And I get that because I have been there. I have gotten those letters and I have seen those penalties. And I can tell you from my experience, it is not fun. Let me paint the picture for you and explain what really happens behind the scene. You file a tax return before April, you feel good, you're done, tax season is done and it's behind you. You breathe a sigh of relief. You survived another year of paperwork and receipts. Now you're back to running your business, taking care of customers, living your life. But then 6 months later, or maybe 8 or 10 months later, there comes an envelope from the IRS in the mail. Boom, there's an envelope in the mail. You know the one, official looking, return address says Department of Treasury Internal Revenue Service. Your stomach drops before you even open that envelope. And you know it's not gonna be a good news. The IRS never sends you a letter saying, great job, you've done amazing. So you open that envelope and it says CP2000. And basically the IRS is saying, hey bud, I think you owe us more money. Come on, let's talk to us. I think we can get some more out of you. It's like they have invited you to negotiate, except you have no leverage. They hold all the cards, they have all the information, and you're just standing there wondering, what did I do wrong? Your heart is racing, you're confused, you're frustrated, and maybe a little angry. You thought everything was fine, and you thought you were done with this. You filed your taxes, you did your part, but nope, there you go again. But here's the problem. It's happening, you're getting this letter because you forgot to report an income. I will explain why. Maybe it's a 1099 NEC from a side gig you did once. You helped a friend's business with a project. They paid you and you forgot about it. Maybe it was a 1099 interest from a savings account you rarely check. $30 of interest seems like nothing, but the IRS knows about it. Maybe it was a 1099 dividend from a stock you inherited and didn't even knew about it. Or maybe it's a K1 from a partnership you didn't even know you were part of. Or maybe this happens to you more than you think. You got a deposit from a bank or a business partnership that you weren't expecting, and it never crossed your mind that it was a reportable income because everything is electronic now. Money moves fast, direct deposit hits your account, and unless you are paying close attention, it is easy to miss. I mean, come on, nobody's sitting there with a ledger in their hand writing down every single penny that comes in. You're running a business, you are busy. And here's the thing, when you get one of these letters, your whole day is shot, or maybe your whole week is shot. I know this because similar letters like this used to drag me out of being a productive salesperson or a business owner back in the days, and it used to drain me out. I'm supposed to be out there earning money, bringing more customers in, and solving day-to-day problems. Growing my business is my biggest responsibility, making money, taking care of employees, and serving my clients. But instead, I'm sitting there staring at this letter, trying to figure out what the hell happened. My mind is racing and I'm trying to figure out what the hell did I miss. I'm second guessing everything I did. Did I miss something else? or there's more coming. I'm out here driving between customer appointments, and if I had to worry about IRS, if I even had any thought of them in my mind, I'm telling you this, my day is done. Forget about being productive, forget about making sales, forget about focusing growth, forget about being present with your own customer appointment. You're just stuck in your head, stressed out, wondering what this is going to cost you. What's the penalty going to be? How much interest have they tacked on? And can I even afford this right now? And that is the most expensive part of this problem. It sucks you out, it takes you away, and now you cannot focus on your kids, you cannot focus on your business, you cannot focus on your spouse, you cannot focus on your customers, your employees, growing the business, solving problems, none of it. Why? Because of letters like this. I know this from personal experiences because I've dealt it, and trust me, those days were not good, and remembering those times, it is not fun. Can I even afford this right now? Because I'm not having a happy ride. It's frustrating, it's draining, and it's completely distracting. And the worst part, it's all because of something that happened months ago that you completely forgot about. Let me break this down. When someone pays you, whether it's a client, a bank, or a partnership, they are reporting it to the IRS. This is not optional for them. This is required. They send you a form 1099, W-2, or K-1, whatever it may be that applies in your situation. They send a copy to you, and they also send another copy to the IRS. But here's the problem. Sometimes that form shows up late. Sometimes it gets lost in the mail. And sometimes it goes to an old address because you moved and forgot to update your information with that company. Or sometimes it's just sitting in your spam folder as a PDF file and you never opened it. Or sometimes the company sends it electronically and you never saw that email because it came from a third-party company which you never saved as a trusted contact, and you are busy running your business. I'm going to take a pause here and I'm going to tell you something. Most of this issue happens to small business owners because they are taking on a lot of hats. It happened to me also because you are the sales guy, you're the technician, you're the compliance guy, person answering calls and running the business, making payroll. And at some point you're going to do something wrong. Some date you're going to miss, some deadline you're going to miss, and a combination of all of this builds up and you become the person that is more than likely to make mistakes. I know this because whenever I do a meeting and I address my employees, I tell them if I make a mistake, point it out because I'm more than likely going to make a mistake that you probably will not. I'm talking to my employees. They probably do a repetition task of same thing over and over every day. I am not. I am doing different things every day, and the chances of me making a mistake are actually much higher. Anyways, continue with the script now. You're not thinking about a random $800 payment from 8 months ago. So you file your taxes based on what you remember and based on what's in front of you. You gather up all the documents you have and you hand them over to your accountant and you're done. But the IRS, they actually have all the documents, every single one of them, even the ones you did not receive. They are matching your return against every single form that was filed with your social security number, with your spouse's social security number, or the EIN of your business. And when something doesn't match, it automatically creates a CP2000. In other words, the IRS is telling you, nice try, kid, but we actually have the receipts. They're not accusing that you are a fraud or you're trying to cheat the system. All they're saying is, hey, we have X, you reported this, and this is something we need to discuss, we need to fill in the gap. And now you have to explain yourself. This type of mistake generally happens to people who didn't anticipate tax deadline except for the last day of the filing time. You know the type, I was one of them, I'm gonna admit that. You wait until April 14, you scramble everything, get everything together. You didn't even give your accountant enough time to go over everything and you're just telling him to just file. You throw the documents at your accountant and hope for the best. But here's the kicker, your tax professional is not on the hook for these notices. He's just going to forward that CP2000 to you and ask you to pay for it. Why? Because you didn't provide this documentation to him or her. I know it sucks, but that's the truth. It's not his job to track down every single 1099 you may have received. It's not his job to police everything. You may have met him just once a year or probably once every 2 to 5 years. If you are one of those persons who only goes to an accountant when you really actually have to, then you have no clear understanding of how you should avoid these issues. He never explained you the system. He never walked you through how to tackle income throughout the year. Most accounting firms tell you, plan better next time. That's not how we roll. They'll pat you on the back and say, make sure you keep better records next time. But hell, they don't provide you any guidance on how to actually handle this issue. They don't give you a system. They don't give you a process. If you are putting on a lot of hats, you need a way to tackle this problem, not emotional support. They just send you on your way with a good luck and an invoice. I'm going to show you exactly how you can avoid this mess from happening in the future. Look, do not call us or click the link below if all you want to do is complain about your massive tax bill. Tax bill is the outcome of your actions throughout the year. It also reflects how your tax advisors are and how committed they are in helping you. Let's be clear, we don't have a magic wand. No one's got the magic wand. There is no special rule for the wealthy. They all follow the same tax code. And no, they don't cheat the system. They just know better. better, and they are strategic about it, and they have people in their team that understands the tax code, and they use the tax code to their advantage. Real tax strategies require specific actions, and those actions must be taken throughout the year, not just during the tax season. Your tax plan covers steps that have to be taken throughout the year, but the results are reflected over the years and year over year. The tax bill is just showing you how well you're stacking your finances, netting you a 6% or a 7% tax bill, or maybe not. April 15 is not no strategy. April 15 is just your report card. It's possible if you follow exactly what we recommend, it is possible for you to cut your tax bill in half, at least less than what you're paying currently. And if you are aggressive enough, you could potentially eliminate your tax bill for the future years. Click the link below to discuss this for free, but only if you're ready to take action and not complain. I've heard all the excuses over the years. I didn't know what my income was. The check came in December, but I didn't deposit it until January. I thought that was a reimbursement, not an income. The partnership sends me a K1 later, and I had already filed it. I didn't think $500 would have mattered. And look, I get it. These are legitimate situations. But here's the thing. The IRS does not care about your excuses. They don't care if you didn't know. They don't care if the letter came late, and they don't care if you thought it was a small amount and it didn't matter. You're responsible for reporting all your income. And if you don't, you're going to pay for it. Let me give you some real examples. I've seen this play out in so many different ways over the years. A client who sold some stock forgot to report it. The brokerage sent him a 1099B, got him late, but he forgot. CP2000. He sold his stock in February, but by the time he filed in April, he completely forgot about it. A landlord who received a small insurance payout for property damage didn't realize it was actually an income. A 1099 miscellaneous, it can create a CP2000. The insurance company paid him $3,000 to fix his roof. He thought that it was just a reimbursement. Nope, it's taxable income. A business owner who was a silent partner in a LLC got a K1. Never opened it, never reported it. Also CP2000. He invested $10,000 5 years ago and forgot all about it. But the LLC is still operational and still sending out K1s every single year. A freelancer who did some project in December and the payment hit his account in January. By the time they filed their taxes in April, they completely forgot about it. A 1099 NEC, and again, a CP2000. It was a small $1,500 check, small enough for you to forget, but big enough for the IRS to notice. A retiree who received a 1099-R for a pension distribution but thought it was already reported on Social Security statement. Again, a CP2000. These people aren't criminals. They are people who work hard and pay their taxes and just miss something. Normal people, good people, honest people, all of them. But the IRS does not care if it was an accident. They still want their money, plus interest, and sometimes penalties on top of that. Because to them, you owe them what you owe them. End of the story. They're not trying to understand your situation or trying to get your sympathy. They're just doing their job and collecting taxes, period. So if you want to come out of this mess, you need a solution. Something that's going to work year over year and get you out of this mess from happening ever again. And this is why coming out with a long-term solution is so important. Because you can't keep living like this. Because you don't want to live like this. You're trying to grow your business and you're trying to build something. You're trying hard to provide for your family and you're trying to create wealth. And every time one of this letter comes up, it's almost like somebody pulled the emergency brakes. Everything stops. Your momentum is gone, your focus is gone, your confidence shakens, you're anxious, you're frustrated, and you are distracted. And now you're starting to question yourself and you're starting to say, did I do anything else wrong? You're wondering if there are more letters coming. You're wondering if you're going to get audited. And that is not the way to run your business, and that's not how you live your life. You can't build wealth when you are constantly looking over your shoulder. You can't grow when you're constantly putting out fires. So yes, you need to fix this issue once, not keep putting bandages on it year over year. You need a system and you need a process. You need to understand what you're responsible for and how to stay on top of it, because the alternative is just more stressful, more penalties, more wasted time and money. So how do you avoid this? Look, I'm not here to scare you. I'm here to help you understand how this works so you don't end up in this situation again. Here's what needs to happen. 1, keep a running list of every source of income throughout the year. Every payment, every deposit, every 1099, and every K1. Don't rely on your memory or don't wait until the tax time to figure it all out. Your memory is terrible. My memory is terrible. Everyone's memory is terrible when it comes to stuff like this. So track it as it comes in. When you get a 1099, add it to your list. When you remember a side gig you did 6 months ago, add it to the list. Make it a habit, make it a part of your routine. Having a cup of coffee, try to remember what happened last couple of weeks or a week and see if there is something that you remember. Write it down, write it somewhere, and then go enter that into your journal on your Excel sheet. Number 2, wait for all your tax forms to be ready before you file. I know you want to file early and get a refund faster, and I get that. That refund feels like free money and you want it now. But if you file in February and 1099 shows up in March, now you have a problem. Now you have to file an amended return. Now you are dealing with extra paperwork. And most forms are due by end of January, but some come late. Why? Because partnerships have to file their own return first before they can issue you a K1. So give it time, be patient. Make sure you have everything before you hit that submit button. Wait until at least mid-February. Better yet, wait till March. I know it's hard to wait, but trust me, it's worth it. So much so, I have several friends and clients that never file their tax return by April. They always go into September and October because they want to file it one time, they want to get it right, and they file for an extension every single time, but they go ahead and make a payment, that estimated payment beforehand, just so they don't have to pay any penalties, interest, and taxes. 3. Reconcile your tax forms with your actual income. When you get a 1099 or a W-2, don't just hand them to your accountant. Look at them. Actually look at them. Make sure they match what you were expecting. Does the 1099 form that your brokerage sent you actually matches the trade you made? Does that W-2 form that your employer sent matches your pay stub? And does the K1 from your partnership make sense based on what you have invested, what you have received? And if you find something missing in your Excel sheet, you're missing a form, then reach out and ask for that form. Don't just assume it's not coming or hope for the best. Call the company, send them an email, get some kind of confirmation. I know I had to reach out to Amazon and PayPal back in the day several times to ask for a 1099, and for whatever weird reason they paid us, but then they said they don't meet the threshold, so they did not issue a 1099. I understand that now, but remember, you're going to have to make attempts to reach out and ask for those 1099s on incomes that you made throughout the year. And if you pay attention to your bank account, you can easily tell who are going to be the interested parties that you need to contact and request a 1099 from. Now, if you have an income and they did not issue you a form, go ahead and report that anyways. You have to do it no matter what. But if you report it now, and if later on the IRS comes back to you and say, you owe more money because the provider gave, or the employer or the contractor or the company issued a 1099 later, then you can tell them, this is the income I already reported. And so that's why that proactiveness comes in very handy. Just because you didn't get a 1099 does not mean you don't have to report that income. You're required to report all the income. Whether or not you received the form, it is irrelevant. And here's something you can do that a lot of people don't know about. You can go on IRS.gov and cross-reference the 1099, the W-2, and the K1s that have been filed with your social security number or EIN number or your spouse's social security number. The IRS has a system where you can go and see what's been reported. You don't have to be a tax expert to do that. You just need to create an account with IRS.gov and look. However, all you wanted to make sure is you're reporting all sources of income, and definitely not miss something like a 1099, a K1, or a W-2, even if it's a small amount. Small amounts add up and the IRS notices them. I simply make a Google Excel sheet for each year. Nothing fancy, just a simple spreadsheet. Because here's the reality, I'm going to forget what all sources of income I had, and I could go back and audit every single transaction in my bank account, personal and business. But if I just write down all my sources of income or anybody that would have made me a payment, I just simply write them down in my Excel sheet. It makes it so much easier. All I have to do is follow that list and figure out who I need to request a document from if it's not already here. By now, we're already getting all the documents that we need to file our taxes. I am still not going to file my taxes all the way until October. Why? Because I'm part of so many partnerships. I don't get my K1s till end of the year almost. So everything is ready, prepared, entered into the system. But until I receive my K1s, I don't file my taxes. But I pay my taxes way before I need to. I already paid all my taxes on January 15th. So I should not have to pay any penalties, any interest, or any late payments, number one. And number two, the government has my money. They are giving me interest on the money that I paid them. I always pay them a little extra to make sure I get a refund every single time of the extra payment that I did. But I will never, ever pay them late, pay penalties and interest for very small negligible amount of tax. And when I think of a source of income anytime throughout the year, I simply add the source to my list. That's it. For example, a K1 from XYZ partnership, or 1099 from a brokerage, or 1099 from a lender, or income from the client. Simple. It's just there on your to-do list to cross-check when you're ready to file. When tax time comes, I pull up my spreadsheet and I go through it line by line. That's it. Did I get a K1 from this partnership? Check. Did I get a 1099 from this brokerage? Check. Did I get a 1098 from this lender? Check. And if I don't get something that I was expecting, I reach out to who was supposed to send it to you. I don't just ignore it. I don't just hope for it to show up. I call them, I email them, and ask for it several times. Now, if you can't get hold of someone, which can happen, especially during the tax time, and you think you can get the document before the filing deadline, don't worry. Just file for an extension. It's that simple. An extension gives you until October to file. It doesn't give you more time to pay taxes. You still have to pay your estimated taxes by April 15, but it gives you more time to get those documents, those paperwork, and put everything together and file accurate tax return. It's better to file late than to file early on and have an incorrect return, especially when you know you are missing an income document that was part of your income. There is no penalty for filing an extension if you pay your estimated tax on time. There's no penalty for filing for an extension as long as you make your estimated tax payments. It goes both ways, by the way. What if I had a 1099 that was a deduction for you? What if you made a charitable donation and you forgot that receipt? What would happen in that case? You are missing out on possible deductions and you are leaving money on the table. I get it. There is a lot to absorb, but I can tell you one thing. When you know what you don't know, things are far more calm when you make a decision. Knowledge is power, and understanding your responsibility gives you peace of mind. I used to sweat my pants every time I see a letter from the IRS. I wouldn't even touch it. My heart would race. My hands would shake. and I would have to ask my wife to open that envelope and tell me what's in it. I couldn't even bring myself to look at it. I was always so scared of them. The IRS felt like a big scary monster that was out there to get me. But it took me years and learning and understanding of how things are handled, how the IRS handles things and what is expected of me and what are my responsibilities. The key here is, what are my responsibilities? If I know them, then I can actually follow them. What am I actually required to do as a taxpayer? Once I understand that, everything changes. I stopped being scared of them and I stopped building anxiety because I knew what I was supposed to do and I knew what I was doing. I constantly put educational content here to keep you informed on what you should expect, what your responsibilities are to take care of. That's what this whole video is about. That's what all my content is about. Once you know those things, life becomes much easier. You sleep better at night, you focus better during the day, you are not constantly worried about what's going to happen next. Number 4, use a system, whether it's a folder, a spreadsheet, or a cloud drive. Whatever works for you, but have one place where all of your tax documents go throughout the year, not scattered across your email or your desk or a filing cabinet or in your car. One place, one system, one cloud file or one cabinet, whatever it may be. That way, when tax time comes, you're not scrambling trying to remember what happened 9 months ago. You're not digging through emails looking for a 1099. You're not searching through piles and piles of paper trying to find some receipt. You just go to your system and everything is there. This is what successful business owners and high net worth individuals do. They have a better grip on their documents, their finances, and their taxes. They have a system for everything. And tax should not be difficult. So here's what happens when you don't have a system. You scramble at the last minute, you miss things, you forget things, you make mistakes, and then you pay those mistakes with penalties, interest, and stress. The cost of not having a system is way higher than the cost of setting up a small system. Setting up a system takes you an hour. Dealing with the CP2000 can take weeks and cost you thousands. What do you think? Which one sounds better to you? What if you already have a CP2000? First, don't panic. It's not end of the world. I know it is easier said than done, but seriously, take a breath. A CP2000 is not a bill. It's a proposal. The IRS is saying, we think you owe this. Do you agree? It's not final yet. You have option. You have time to respond, usually 30 days. Use that time wisely. If they are right and you did forget something, you can agree, pay what you owe, and move on. It's not end of the world. You make a mistake, you own it, you fix it, and you move on. If they are wrong, and sometimes they are, you can respond and explain to them why. Maybe they are counting something as an income that was actually a loan or a repayment. Maybe they are including a form 1099 that you already reported under a different category. Maybe that's a legitimate explanation. Maybe. If it's complicated, and it might be, you get someone to help you and respond that correctly. Don't try to handle this alone if you don't understand it. This is not the time to DIY your way through it. Get a professional to help you. The worst thing you can do is ignore it. I have seen people do this. They get scared and they just pretend it does not exist. They throw the letter in the drawer and hope it will go away. It does not go away. Because if you don't respond, the IRS will assume they are right, and then it becomes a real bill. And then it actually becomes a real bill with penalties and interest and collection notices. And then you are in trouble. You have no leverage to communicate or to give them an explanation. And at that point, you're too late to negotiate or give them any explanation. Now they are garnishing your wages, they are putting liens on your property, they are freezing your bank account, all because you ignored a letter. So respond. Even if you're not sure what to do, respond. Call them, write them, or get help if you need to. But do not ignore it, because that's the worst thing you can do. What the response process looks like. When you respond to a CP2000, here's what typically happens. You send in a response and explain your position. The IRS reviews it. This can take anywhere between a week to a few months. If they agree with you, they will send you a letter saying the case is closed. If they disagree with you, they will send you another letter explaining why and give you more explanations and options. You might go back and forth a few times, but eventually it gets resolved. The key is to stay on top of it and respond to every letter promptly. Don't let things drag out or miss a deadline. Be proactive. 4 million CP2000 notices each year. Over $4 million in additional taxes and penalties goes to the IRS, which could have just stayed with the taxpayers. And most of it can be avoided. Not because people are trying to cheat, but because they didn't know, or they forgot, or they didn't have a system. They were just busy, or they were overwhelmed and they made a mistake. Here's the good news. You don't have to be one of those 4 million people. You can completely avoid this. You can set up a system. You can track your income and you can wait for your forms. You can take control of your tax situation instead of letting it go out of control and go into a spiral. I have made these mistakes too, and I have paid fines and penalties, even when my tax bill was almost zero. Why? Because I missed a deadline, because I didn't respond correctly on time, because I didn't understand how something applied in my situation. I have been where you are today. I have felt the panic when I open a letter from the IRS. I have felt the frustration of dealing with something that could have been avoided. But here's what I've learned. Every mistake you don't learn from is a mistake you will keep on paying for. If you keep making the same mistake year after year, you are just going to keep paying penalties year after year. But if you learn from this and fix the underlying problem, then you will never have to deal with this again. And the IRS, please don't forget, they have all all the records, they have all the information. They are in business of collecting money and they are pretty good at it. They are not the bad guys, they're just doing their job, but you need to do yours. So if you're a business owner, a landlord, a freelancer, anyone with multiple sources of income, you need to stay on top of this. You need to track your income, you need to wait for your forms, and you need to reconcile everything before end of the year. This isn't optional, this is required. And if you feel overwhelmed, that's okay. That's completely normal. The tax code is complicated. Everybody expects you to be an expert, and that's why we are here. Our office offers free consultation. We've been doing this for over a decade. We have seen every version of this problem and we know how to completely avoid it. We have helped hundreds of business owners set up a system and track their income. We have responded to countless CP2000 notices and we have saved our clients thousands of dollars in penalties and interest. We offer a free 30-minute consultation where you can walk through your situation, give us a clear picture of what you're working with and what you need help with. No pressure, no obligation, just real guidance based on your specific situation. We'll look at your situation, we will identify the gaps, and we will show you what you need to do. And then you can decide if you want to handle it yourself or you want to hire someone. Either way, you will walk away with a clear picture. You will know what you're supposed to do, and you will also know how to avoid this problem in future, because the cost of getting this wrong is way higher than the cost of getting it right. Because the cost of getting it wrong is way higher than the cost of getting it right. A 30-minute conversation can save you thousands of dollars later on. Don't wait until you are paying penalties and interest. Reach out now and let's make sure your tax return is complete, accurate, and audit proof. Let's set up a system so you never have to worry about this again, because you work hard for that money. You wake up early, you stay up till late, and you sacrifice and you grind. And you shouldn't have to give more money away just because you missed something. You shouldn't have to live in fear of the IRS. You shouldn't have to stress about tax season every single year. There is a better way, and I'm here to show you exactly that. So reach out or book a consultation. Let's fix this once and for all, because life is too short to be stressed about taxes.